Hey everyone, Ash here with the Better Than Yesterday blog. There are many different retirement savings plans out there, and saving for retirement isn't a one-size-fits-all deal. That means being educated on the different types of retirement accounts will help you select the best retirement plan for your situation. So let's see what each one looks like. An individual retirement arrangement, or IRA, is an account that you can set up for yourself. There are 3 IRA accounts that you can set up yourself. The first is a traditional IRA, which defers your tax to when you retire. This means that you get the tax deduction now rather than later. So if you plan on being in a lower tax bracket when you retire, then a traditional IRA is the best option for you. You will take your traditional IRA contributions as a tax deduction each year that you contribute. Currently, the maximum IRA contribution is $6,000 a year. Next is a Roth IRA. A Roth IRA is contributed with after-tax dollars, meaning when you withdraw your retirement at the appropriate age, then you will not be taxed since you already settled your tax bill on the contributions. However, Roth IRAs have income limits, which means if your AGI is over $140,000 as a single filer, then you cannot contribute to a Roth IRA. Next is the SEP IRA. SEP IRAs are a retirement plan for self-employed individuals. Contributions are made to a traditional IRA, and the difference is that you can contribute way more than a normal traditional IRA. Self-employed individuals can contribute 25% of their net earnings from self-employment, up to $61,000 for the year. Plus, you can use your SEP contribution as a tax deduction for the year. The contributions must be paid by April 15th to use on your prior year tax return. Now on to 401k. A 401k retirement plan is offered through your employer, so this plan is only available to you if your workplace provides it as a benefit. With a 401k, you can contribute up to $20,500 each year. And your employer may also match a portion of your contributions. But be aware of what plan your employer offers, whether it's a Roth 401k or a traditional 401k. The same tax principles apply. Roth is a post-tax and traditional is pre-tax, so you either pay your taxes now or later. Next, we have 2 retirement plans that are very similar to a 401k retirement plan. The first is a 403b plan, which is basically the same as a 401k, except a 401k is a for-profit organization retirement account, and a 403b is a nonprofit or government agency retirement account. Next, we have a 457b plan, which again is very similar to the 401k, but it's also just offered by state and local governments and some nonprofits. The contribution limits are the same, but the 457b plan has a special catch-up contribution limit for state and local government plans. Next, we have a couple of retirement options for small business owners, which is typically 100 or less employees. The first is a simple 401k plan, and unlike a regular 401k, the employer must do either of the following. The first option is to match contributions up to 3% of each employee's pay, or make a non-elective contribution of 2% of each eligible employee's pay. The employee can annually contribute as of 2022 $14,000 each year. The next option is a simple IRA plan. And again, the employer must do one of the following: match contributions up to 3% of each employee's pay, or make a non-elective contribution of 2% for each eligible employee's pay. And the annual contribution limits are the same as the simple 401k. Last is an HSA account. Yes, you heard that right, a health savings account. This is a nice add-on option, not a main retirement option. Think of this as a health IRA. There is no minimum distribution for an HSA account. Therefore, you can keep money in an HSA for as long as you would like. Of course, you can still use it over the years to pay medical expenses tax-free, but when you turn 65, the HSA will act like a traditional IRA. You can take money out for anything that you'd like, but you'll just pay taxes on it when you do. You can still pay for medical expenses tax-free though. Again, this is not a main retirement plan. This is just a secondary retirement option or a future side benefit to owning an HSA account. Deciding on a retirement plan doesn't have to be painful. If you still have questions on the best retirement plan for you, then connect with a pro to help you pick the best option. Hopefully, this gives you an idea of what retirement route works best for you.